Welcome back to A Bite from the Money Sandwich, where we provide practical and easy to understand tips and ideas on how to manage your money better so as to let you retire with comfort and on your own terms. Whether you're a first-time buyer or looking to add to your property portfolio, buying property isn't just something you do every day. So it's important to understand what specialists you need to help you make the best choice, as it's a very expensive mistake if you get it wrong. Today, I am joined by Phillip Allen of My Debt Advisor, who's going to help go through the who's who when buying property, as well as provide some valuable insights and tips on being as well prepared as possible when applying for your mortgage loan. Well, I'd like to welcome Phillip Allen to our show today. Welcome, Phil.
Hi, good to be here, Mark.
Good. One of the things, and I've known you for a fair number of years now, and you've been able to help a lot of my clients over the years, and they've really appreciated your support and expertise. And I suppose it really came down to, I was reading one of your recent newsletters, and it talked about all the different professionals you need on your team that surrounds you, that you involve when you're either buying a property for your first home, an investment property, or just getting into the property market for people now downsizing and all sorts of reasons. So I just thought it'd be really good to get you on the show, and you can just talk about all the different people, all the different specialists and their roles, because I just don't people realise the amount of people, and secondly, the costs that are involved.
Yeah, definitely. But and while you do mention cost, though, it's the importance that they play. So don't focus so much on the cost, but understand the real value they're bringing to the transaction.
Very true. Yeah, it's always about value, but it's just important that when people are adding up the cost, it does all add up. So let's probably the first person if they want to actually go buy a property, they'll go visit their local real estate agent if it's in their local area. And we probably also should touch on there are buyers agents or property advocates who will help buy properties in other states or suburbs if you need it. So really, what, from your point of view, does the role of the real estate agent does?
Look, the biggest thing that you have to remember when you're dealing with a real estate agent anywhere is no matter how friendly they are or what they're doing, they represent the seller. And they're interested in trying to find out little ways to find out just how far you can be pushed in price, how strong you are, all these sorts of things. So it's very important that when you're actually dealing with the selling agent, that you almost need to be an actor. A lot of people tend to be like far too open, and the agents are very good at asking questions to find out more information, and you may be doing yourself a disservice in giving away too much too early. So it's very important to have a bit of a mental strategy before you start talking too much to selling agents about what you're going to say and how you're going to position yourself to help you negotiate the best price at the end of the day. The flip side of that, Mark, is the buyer's agent. So the buyer's agent is basically someone with a property background and experience, and their job is to represent you. The benefit of a buyer's agent is they bring all that detailed knowledge about property and how the whole process works, and they can be a little bit less emotional about it for you in some cases. So the thing about a buyer's agent is they will cost you something. So, but when you keep that in the context of this big expense that you're about to make, and the fact is you don't buy a property every day. In fact, you're lucky to buy a property, you buy it once every blue moon, and you don't necessarily know all the little tricks and the things that agents do to draw you in, and in a lot of cases get you to make an error or pay too much money or those sorts of things.
Yeah, one of the things I think I really like about the buyer's agent, and you are paying a fee, but exactly as what you just said, if this is a $500,000 million property purchase, that's a lot of money, and having people on your side who can actually negotiate the price down, or secondly, know when it's too overvalued.
Yeah. So the good thing is they will tend to, you tend to pick a buyer's agent. There's a lot out there, and like everyone, there is a spectrum of quality. Is just you want to find someone that is probably located and works a lot in the area that you're specifically looking in, because they will then have the local knowledge. They also know the local agents. The thing about the real estate agents is they know they can't do all the usual tricks with the buyer's agents, and so they'll often be more forthright with correct information. The other thing that a buyer's agents do is they'll have an idea of, what are the good areas of a suburb, what are the bad areas. They'll be able to walk in and look at a property, and they'll very quickly get a sense of anything that the agent is trying to cover up, or if anything about that property which could potentially be a problem that might not necessarily stand out to you. So they can often stop you from making an expensive mistake. But then, of course, there's the fact that they will go in and then generally help you with all the negotiation. And in most cases, they will save you more than their cost just on that alone.
Yeah. Okay, I do think, and we're not saying don't use real estate agents, but it's really important, if you're not going to use a buyer's agent, to get as much knowledge, do as much research, so you know what you're looking for. So when a real estate agent, exactly as you said, may be trying to cover something up, or they may just be not quite giving you all the right information, you at least know the right questions to ask. But if you can afford a buyer's agent, they are definitely worthwhile.
Yes. And if you've been looking for a while and you're getting frustrated and emotional, then invest. The good thing about a buyer's agent, they'll do the running around for you, and they will take all the
emotion out of it as well.
It totally is true. And they will often see properties. Agents will often let a buyer's agent know about a property that isn't even going to be advertised on the market.
Oh, okay.
So they often have an opportunity to see properties that you just won't see at all if you're just looking around by yourself. So they're definitely well worth considering in a lot of circumstances.
Okay. The next role is a valuer. I've seen some I've heard say you get valuers definitely from the banks, or used to traditionally. Then now you're getting independent valuers, you're getting valuers from big corporates, or just rogue valuers, and you're getting sometimes you're getting some very varied valuations of properties. So that's something to be wary of.
Look, it is. So a lot of people do think about getting a valuation on a property before they buy. Look, you can do that for your own benefit if there's anything in particular about it you're unsure of. But the reality is that the bank, if you're using a bank or borrowing money or any way, the bank will basically want a valuer from their own panel to come and do the valuation for you.
Right.
Now, the good news is, even now, typically up to around $3 million, that will be done at no cost or obligation for you.
Oh, okay.
The second thing to understand when it comes to a valuer is, the problem with a valuer is they're generally going to be a little bit conservative as to what the realistic private value of the property is. But quite often in a property market where there may be multiple people looking at a property, it's not unusual for the property to end up being a little bit more expensive than what the valuer might consider.
Right.
So in general, unless you have a specific reason, I don't think there's any, pardon the pun, value in paying with your own money to get a valuer to do a valuation in advance. Rather, you're better off to let the bank valuer do it. Now,
can I ask, what about, like, if we're seeing the last 12, 18 months where properties in, say, Sydney or now even in Brisbane are going up by 20, 30%, valuations there must be a lag time between what they're valuing these properties at.
Well, yeah. So here's where the main thing is which I was about to add, is that the bank valuer, when they come out, well, basically they want to know that you have finalised the price of the property you are purchasing.
Right.
Because the issue is if you haven't finalised the price of the property in advance, and that could be by auction, in a way an auction finalises that price, then because their professional indemnity is on the line with the bank, they will tend to be very conservatively value it, and almost certainly the purchase price that you then have to pay is higher, and that can be problematic in a lot of cases with the bank. where they've got a valuation from their valuer that's lower than what you're paying for it. The reality is though, once you have agreed on the price, either by auction or negotiation, so long as the purchase has been advertised on the open market via a third-party real estate agent, so the 99.9% of the time, the valuer will go, well, that is the market price because it was an open market sale, and it will come in at what you've paid for it.
All right.
The only time where it can get a little bit trickier is where you're buying, say, directly from the owner. And so the bank is a little bit more cautious that it's arm's length. But so generally, if you are buying directly from an owner and not via an agent, it's very important that you do need to agree on the price and have your contract ready to go, but that you definitely have a cooling off period just to ensure that the valuer comes in and doesn't think that the owner has somehow inflated the price and you're overpaying.
Yeah. Okay. So we're talking about the banks, and they've got the lending products. So it's probably a good time to bring them in. So, and we will actually definitely speak later regarding banks for the lending compared to mortgage brokers and how all that is involved. But when we just look at the banks and look at the whole range of products, you're someone who's first home buyer. You walk in and they say there's 6 different products. There's fixed variable with offset accounts, not offset accounts, redraw facilities. That must be for a lot of people, just mind-blowing.
Yeah, definitely. So this is why it is a very good idea to not rush this and do your bit of homework and investigating before you start looking. The good thing, when you cut through all the noise, a mortgage is quite a simple product in terms of, there you owe a sum of money. There is an interest rate which you are paying, and there is a monthly repayment which you must make. There are little things around that, like a fixed rate versus a variable rate. But once you get your head around these things, they don't actually change. So it only takes a little bit of effort to educate yourself to be able to get a sound understanding of the majority of things that you'll need to know for your circumstances. Probably the biggest thing to understand from my perspective is the importance of actually getting a full assessment from the bank before you go and start putting offers on a property. This is a mistake which a lot of people make, where the banks have calculators on their websites where you can put in some details and it'll give you an indication of how much you can borrow. Or a lot of them say that within half an hour, if they give you your details, they'll tell you how much you can borrow. The reality is, when you look at all those things, the caveat they always put on them is it's subject to checking all your information.
Yeah.
And so what I've seen many times is people actually going out and even securing a property at an auction because they've been told that indicatively they can borrow a certain amount. And then they've turned around and gone back to the bank or wherever where they looked at this. And when the bank actually looks at all their documents, they go, oh, no, this figure here, we actually only take 50% of that. So now the amount you can borrow is lower. And it's not enough for them to get the loan they want. And they either lose their property or worse, it's very stressful because they could be losing their 10% deposit.
Yeah. Right. So I think that's worth going into deeper because I've seen a lot of people, and lending or borrowing even 5 years ago to the way it is now is very different. And I know there are even responsible lending laws are looking to be changed. But for the moment, when a bank looks at your cash flow, your borrowing capacity, they're looking at your bank statements and looking at the amount of, will I say, Uber Eats, or even if you've got HEX debt on there. It's amazing. It's probably worthwhile explaining how detailed they now look at your cash flow.
Yep, definitely. So one of the things that came out of the Banking Royal Commission a few years ago, technically it always applies, is all lending, all residential lending, whether it's investment or for your own home, if it's being done in your own name, if the properties are in your own name, then it's covered by consumer law. And the consumer law basically says that the bank has an extremely high duty of care to rigorously check everything about your situation to ensure you can afford that loan.
Right.
And part of what the government regulator behind all this really pushed on them 3 or 4 years ago is that they really have a duty of care to look at what every person is spending, because two people can have the same income and one can be very good with their expenses and someone else can be terrible. So they actually have to delve down and look, yes, into the individual expenditure of each individual or couple, and then take that out of what income you have, and it's only what's left over. So from that point of view, you may feel that you have very good income. But the reality is when you actually start looking at all your little monthly expenses, you often have less cash flow from the bank's perspective than you might think.
Okay.
The fact that it is discretionary, at this stage, the banks were pretty much told, well, no, if that's what you're spending, that's what you have to use. So in some cases, it is a good thing for us to look at that and go, well, actually, go away for a month or two and cut out some of the extras and show what you can actually live within. Yes. The second thing which catches people out a little bit is that even though interest rates are currently at like record lows, the bank is actually required to test that you can afford the loan at a much higher rate. So that's at a rate at about 3% above what you're actually going to pay. So people often actually go, oh, yes, if I put this loan in and at 2%, my repayment will be this, I can afford that and, I can afford that loan. The bank is a lot more conservative. So suddenly between the lender having to use a much higher interest rate and being very, very much counting up every dollar in your expenses, quite often people suddenly discover that when they first approach the bank, they can borrow a lot less than maybe they were thinking.
Yeah. Okay. So 2 points you've really made there, Frank, is that 3% extra. So if it is a 2%, that's what they've done the calculation, because that may be the rate at the moment. They really should be looking at what's 5% and whether that's still affordable, because an extra 3% in that example.
Yeah.
The second thing you were saying is maybe for a month or two. So how long does the average bank look at your statement? Do they go back just 1 month? Do they go back 3 months? Because if you're preparing to go get a loan, it should be 2 or 3 months out. You should start to be looking at your cash flow.
Look, the big difference is if you can contribute a 20% deposit or more,
yes,
they tend to only look at 1 month.
Okay.
If you have a smaller deposit, because that means the risk is greater for them in some ways, then generally they will ask for 3 months worth.
Good point.
Yes, and so they would want to look at both your main bank accounts and your credit cards to make sure they're not missing any expenditure on either side.
Okay, thanks. And you can talk about the banks and the way they're doing and all that cash flow, and because it really is, it's tough to get a loan. I know properties are going through the roof, but it is actually quite an emotional experience to go get that loan. So you've just provided some really good tips there. Okay, so just some of the other people. Conveyancer.
I'll pause you there.
Oh, yeah, sorry.
The one last thing that I really wanted to add in is about formal pre-approval. And we kind of started alluding to that, but then we jumped onto the expense bit. I was going to say it's very important that you actually get a formally assessed pre-approval for your borrowing capacity. So that is one where you'll be asked to provide all your documents. You actually do an application for a generic property and you provide all your documents, and it's actually checked by a proper assessor, who then says, so long as your circumstances don't materially change, we would lend you this much for a property.
Okay, and that's why you have the confidence to go out and bid or buy.
To go to an auction or whatever with a high level of confidence.
How long does that last for?
Generally, for a lot of lenders, it's only 90 days, but just by providing some more pay slips, it's very easy to roll it for another 90 days. Some of the major banks will actually honour it for 6 months. Okay.
No, good. Thank you. Okay, so conveyancing.
Yes.
You need a conveyancer. A lot of people wouldn't apart from buying a property, would ever know the need for one. So please just tell us a bit about what a conveyancer does.
Okay, so the role of the conveyancer is to convey the property from the old owner's name to your name. And so in the past, this would be done often by people's solicitors. But like a lot of things in this day and age, there are people that just specialise in conveyancing and who may not necessarily be a full solicitor. That's not necessarily a bad thing, because a lot of solicitors will say they can do it, but they don't do it very often. So they're often not used to looking for some of the fine detail, which can be important. Okay, so basically the conveyancer's job is to on your behalf, check the contract for the property which you're looking at, make you aware of any terms or conditions that they think are unfair or maybe should be changed in any way. And a good conveyancer will also alert you to anything unusual in the contract that you might need to want to know before you commit to buying the property. Right. So that can be things like, if it's a house, it can be an unusual council easement, a large stormwater easement, which could cause a lot of problems that mean you can never expand that house, or it's going to be unattractive to other people to buy it in the future. It can be, all covenants that reveal that they actually have the right to buy your place because they might be building an expressway down there in 5 years' time. All these sort of things that may actually have an impact on your property. Or another interesting one is, for example, which we'll probably should also talk about a bit later, is they may pick up, for example, if there is a problem with that property. This can come up with units. It can also come up with houses where, for example, they realise that there has been an illegal extension put on the property. Nice. So which if it's discovered by council, they can ask you to remove at your expense. So I saw one example of that here in Sydney where, except for the owner picked it up, the cost to correct that was estimated at $350,000.
Goodness. So because you wouldn't pick that up on the legal document, so how was a good conveyancer pick that up?
Well, quite often there's two things. It's in some cases it's the fact where they may notice that the floor plan of the house is not really matching the detail in the contract. Yep. Look, the second thing is, and this is more for units, is quite often what they will recommend you get is what's called a Strata report, the Strata is the common fund that's used in a block of units for all the maintenance of the common areas and all that sort of stuff. And sometimes these can be poorly run, or a building can have developed a problem, and you may be asked to make potentially a large contribution to the group fund to fix this up. Yeah. So I guess similarly, I saw one a number of years ago where there was an issue with the fire compliance of the block as a whole, which is a very serious matter. And the client thought they were getting a fantastic price on a unit, but the conveyancer picked up that there was potentially going to be up to $100,000 per unit levy.
Goodness.
To rectify that, and they weren't actually sure that was going to rectify it. So this is where it's very important, if you use a conveyancer, definitely look at getting some recommendations and ask their experience. Just because they're a solicitor doesn't mean they do it every day. A solicitor is sometimes more expensive, and not necessarily going to do the job if it's not something they do. So always ask, how often do you do this sort of thing? And get a couple of quotes on prices from to get an idea of what is a fair price. You don't want to necessarily take the cheapest one, because they'll go through the motions of making it all happen, but they won't check the detail. So by trying to save a few $100s, you might end up costing yourself $20,000, $50,000 or $100,000.
Yeah, no, good point. Good point. Yeah. Okay, so something else, because I want to make sure we try and get through. There's a few more to still to go.
Yes.
Pest inspections and insurance. So you wouldn't think, oh, well, the house looks fine, the unit looks fine. Why would I bother with a pest inspection? But they are important. Yeah.
Look, so pest inspections is really something you do if you're buying a house or any kind of freestanding sort of dwelling. It'd probably count if it was a duplex or something like that. But if there's because the pest inspections, and if it's in a block of units or something like that, that's the responsibility of the strata.
Right.
And a strata report will replace that and also help make sure that the whole thing is being run properly.
Okay.
Look, pest inspections are important because, again, you don't do it every day. It's a couple of $100, but it's amazing how often I have seen it turn up that there is a certain amount of damage, whether it's from termites or from whether it's called a building and pest inspection. So usually a good person, they'll get right under a house and they will really carefully look at things, and they'll actually go, well, it actually looks like they haven't built the foundations solidly enough, and and it's starting to subside a little, or there's a section of the house where it looks like it's partially damaged by termites. Now, the key thing is that doesn't necessarily mean you might not buy that property, but it gives you might mean that you get a valuation for the cost of getting that fixed, and the seller agrees to either reduce the unit by that cost. Okay. The problem is if you buy the property and discover it after the fact, that's your expense. Or in some cases, it is bad enough where you just need to make the call to walk away, and it saves you from making a horrible mistake.
No, good points. One thing I like to go to is actually one thing we really haven't talked about is your own role. And when I look at this and I look at banks and the products, and most people still just go to a bank and say, okay, I just need to go get a loan. It's not like the old days when you'd have the local bank manager and you could actually build a relationship with that. It's all gone now. So when you're looking at banks, to me, you're looking at products. They're going to provide the products, but you need someone to actually guide you who's got the experience, the speciality, to be able to understand what those products are, what they mean, what's the pros and cons for that. And I suppose that's really where it leads to your role as sort of under the umbrella of mortgage brokers, but you, I know, to me, are more like a debt specialist or a debt strategist. And people have got all ranges of experience and years in the business. So it really is important to get this part right too. So I'd probably allow you to, if you just give a bit more information about what you do and how you differentiate yourself from, say, a bank lender.
Yeah, definitely. Look, again, a bit like a buyer's agent and a real estate agent. The difference between a bank lender and a broker is the bank lender works for the bank. So they're really only going to tell you about the bank's products. They're not going to tell you if someone down the road has a much, much better offer, or if their product is limited in some way. The broker is covered by consumer law and at all times must have your best interest in mind. So their job is purely to look after your interests, and if they don't, they're actually liable to compensate you. Right. That's the first thing to understand. So the job of the broker is obviously to understand your circumstances and, based on what you're wanting to achieve, help you work out who are the best lenders that might be able to meet that brief, and generally give you a good idea of why you would pick one over the other. And in a lot of cases, to also then help you negotiate the best interest rate that you can. Because in the current market, the interest rate that you see on the internet or just on their website in general is not the best interest rate that they'll often negotiate behind the scenes. The big thing that you need to understand, the other important thing to understand though, which is quite good, is that unlike a lot of things, a broker doesn't come at an extra cost to you compared to going direct. Okay. Effectively what happens, and this will be the abridged version, is the lender has already factored in the cost for you speaking to the person, their own person, to talk about product and all that sort of stuff. They've already factored that in to the interest rate you're paying in the loan. The broker is basically taking over the job of that person that they employ themselves. So all that basically happens is the lender will pay the broker what they'd already factored in for if you were using their own person. The second thing to understand on that is in Australia, it's incredibly heavily regulated. So unless you have some kind of unusual credit problem or something like that, the broker will get the same no matter what lender you go to. So they don't have a vested interest in pushing you to one lender or the other. they're quite happy to point out your 3 or 4 best options and why, and they have no material interest which one you pick.
Okay, so just summarising it so far, yes, the one part I really like is that, yes, if you go into a bank, well, of course, they're going to show you their own products, not the products down the road, whereas you can actually look at a whole range of products and just see what's the best and most appropriate to the actual client. And at the end of the day, you're representing the client, not the bank.
It is, because it's like, as I said, a mortgage is actually quite a basic product, and at any given time, different lenders are running special promotions or being, more proactive on certain things. You're never going to keep track of that. So, whereas that's the whole point, is you might come in and say, always look at your existing bank if that's what you want, but then it's the ability to go, but hey, yeah, this lender over here is currently running a very aggressive promotion that's going to save you an extra $2,000 or $3,000 per year. Now, at the end of the day, you might go, well, I don't like that lender. I still want to go with my existing bank. But the whole point is at least you be making intelligent and educated decisions. You know where the lines in the sand are, rather than just working on limited information and going with what you know.
And I know also from, and it was only just a case you helped client of ours just recently, that especially with the potential rate rises that may happen in the second half of this year, a lot of banks were offering a fixed rate, and so people were having to sort of lock in a fixed rate before the rate rise. And some people are saying, well, actually, that's a good fixed rate, or that's not a great fixed rate. But unless you actually are doing this day to day, how would you know?
You don't, and that's the problem. And there's so many quirks. For example, there's one lender that has quite a competitive fixed rate, but they actually have a deal where if you leave 50% variable and fix half of it, they give you an extra 0.25% off the fixed rate, which makes it really attractive. But if you don't know these things, they're not even on your radar, but they can make quite a good difference to the saving and the interest rate you're paying. But you're not going to be able to do the research on that. This isn't on their website. It's not advertised anywhere except for it's the broker space. And the reason why lenders talk to the broker space so much more now, communicated, is because they do know we do it every day. We make it more efficient for them. But it's the percentage of the market that are now using a broker is 65 to 70%.
Oh, okay, that much.
So, it has really jumped, particularly during COVID. And so you're reaching the point where the lenders are basically, they've accepted that one of the most efficient and intelligent ways for them to work is proactively with the broker community.
And as you said, it's not actually costing you any more than going to the bank direct. Probably on the flip side is that, well, not everyone's just going there for their first home loan. Some people are actually, years down the track are getting their second, third, they're building, gearing and all that to help that strategy. That's also important.
Yeah, absolutely. Look, and the biggest thing is that's where the quirks between the different lenders start to really matter. If you're dealing directly with the lender and they have a fairly restrictive policy or something, they will often just turn around and go, oh, based on your circumstances, you can only borrow X amount. Whereas and you go, well, that's not enough to achieve that goal, or it really limits me into what I want to do in some way, whether my business or something else. Whereas the reality is quite often we see that there may be another lender that has a much more proactive policy over key points to your circumstances. And it can make a huge difference to how much they might be willing to lend you. So everyone focuses on interest rate, but often the difference between the best rate and a lot of the market might only be 0.1%.
Right.
If you pay 0.1% more, but you can borrow a lot more to achieve an important goal that might be worth $10,000, $20,000, $50,000, $100,000 to you, that's far more important than rate. So it is. While it's always important that interest rate is one of your key considerations, it's always secondary to what are your biggest strategic goals that you're trying to achieve. And that is where there can be a very big difference between lenders, and a very good broker will help in that regard.
Yeah, no, important.
that's probably the last thing that it would be good to touch on, is that it's very important to understand that there is a big spectrum in the brokers out there that you would deal with. So it is still an industry where anybody can be a broker or a bank lender with, it's only about 1 or 2 weeks training. You don't need to have any other formal qualifications. You need to just not have a criminal record.
Okay.
So you may be a very, very nice person, and you can talk, you talk about the products, but you don't, particularly as a broker, if you don't have much experience, you're not going to have built up that knowledge about those fine points of difference between all the different lenders that can make a big strategic difference for a client. So that is where, and often the issue is, this is where building a relationship with the broker can be very powerful, because generally they work for themselves, or they're building a name and reputation. So they're going to be around for the longer term. The problem that I see in the banks is occasionally you do find someone who's very good at what they do, but quite often 6 to 12 months they've either left because they're frustrated, or they've been promoted out and they're not available to you any longer. Whereas a good broker will understand your situation and work with you longer term. But it's very important to ask the broker, how long have you been doing this? Do you have any other qualifications where it's good to see they've done, whether it's accounting or something with a good technical background that's relevant? I guess.
I think that I was definitely going to make that point too, that most mortgage brokers are a small business. They're there for the long term. They actually want to keep you as a client and keep seeing you for your next property. Whereas, it's unfortunate when I was saying before about the bank managers being at your local branch, being there 10, 20 years, that's just not the case. And it is one of the frustrations that, someone and you start to build a relationship, within a year, they've already gone or moved up or changed. So it's a shame that relationship, but it's definitely, as you said, now you can see it in the numbers, over 60% going with mortgage brokers. Okay, so it's probably the final question, because we've covered a lot of stuff and there is so much. And I probably just one quick comment on the fees. Like, yes, we talked before about if you're buying a property, not only the actual cost of the loan, but you also need to, if you're getting a buyer's agent, their cost. Your cost is built in, so that's okay. But a lot of people miss out when they say, I've got enough for a deposit. They don't. They always forget about stamp duty, don't they? Yeah,
there's all the little extra costs. It's very important to understand that. So it's very important to check if you're a first home buyer, understand that there are concessions in most states to help you get into your first home. But like all things government, they are evolving and changing. So there's usually, most of them have a very good website. So if you Google your state name, first home benefits or something like that, that will generally bring up a good starting point. And again, that's something which a good broker will generally have knowledge about and be able to help you and explain sometimes what the information means. And it is all the little things, as you sort of said, like your solicitor and conveyancer will generally cost maybe about $1.5. You need to allow maybe $1,500 for that. You maybe need to leave another $400 or $500 for a Strata report or a building and inspection report. So, it is good to understand that, particularly if you were looking at going in with a smaller deposit, you do need to make sure you factor in those costs. And again, that's something which either a bank lender or a good broker will ask you all the information about your situation, and they'll let you know whether you are in a position to do it or not, or you need to save a little bit more and what your target is.
Yeah, no, good points. One of the things, and we've run out of time for this, but even helping, we're seeing a lot of people, what I call the sandwich generation, people in their 50s and 60s, helping their adult children, even with that deposit or a bank guarantee. And there's a whole lot of that. So we will definitely cover these in another session, but it's just really important that probably through this whole thing, that the one thing that's been really clear is, one, do your research. Secondly, get good people around you. You don't have to do this all on your own. Definitely. That's it. Talk to people you respect or have got experience with property, and they will generally have accumulated some good people that they can refer you to. Yeah. You don't have to
just try and work it out yourself. Just word of mouth is a good way to find out who's had good experiences and get some recommendations.
Yeah, agree. So our final question we ask all our guests is, well, what for you, Phil, what's been the best piece of advice you've ever received?
Well, the one thing from working for myself for 20 plus years and being both in financial planning for a while, but now just specializing in lending, is dot your I's and cross your T's. Get it in writing. Get it in writing. It's amazing how people can say whatever they want. They can lead you down the garden path. But if you are on the same page, they won't be afraid to put it in writing. So it's amazing. This can be true whether you are looking at going into business with someone. What it does, if nothing else, is when you put it in writing, suddenly can draw out the things that maybe you both had a slightly different interpretation on. And it stops it getting messy down the track when for, unfortunately, things sometimes do go pear-shaped. In the context today of talking about buying a house, an agent can tell you whatever they want, but if it's not in writing, they'll just say you misunderstood them.
Yeah.
So one thing is when you're making an offer, when you make an offer to the agent in writing, they legally must pass it on to the owner. When they tell you a certain thing about a property, put a few dot points saying, just confirm we've spoken about these points. You said this, or this is what you presented. Can you please confirm? And those things can be very valuable in protecting you in the occasional thing where things go a little bit pear-shaped and you can clearly show that the agent represented that. That can be very, very important.
Now, that great piece of advice. Even from my own point of view, when I help clients or coach clients and they have some goals or dreams, I said, put it down in writing, pin it to a fridge. It's amazing how powerful just seeing it in the written word every day can be there. So, no, that's a great piece of advice. And, yeah, get it in writing. Okay, all left to say thanks, Phil. Much appreciate all your expertise and help for helping people getting into a property.
Yep, you're welcome. Looking forward to talking some more again.
Okay, thanks, Phil. Thank you for listening to today's episode. If you'd like to know more about Phil or interested in his debt strategy services, visit mydebtadvisor.com.au. Also, feel free to reach out by either emailing me on admin@themoneysandwich.com or visit my website, themoneysandwich.com, if you have any questions or want to learn more. Enjoyed this episode and want to hear more of A Bite from the Money Sandwich? Make sure you subscribe on your platform of choice so you automatically receive each episode as soon as it's released. As with every podcast, this information is not advice, as not personalised to your own situation, and past performance is never guaranteed for the future. What we are trying to do here is provide tips, coaching, and education to help improve your money knowledge, which we believe can only be a good thing. See you next time when we take another bite from the Money Sandwich.